Hello, fellow traders worldwide. This is Gabriel again. Welcome back to my channel, Forex.Real.Trader coaching sessions. First of all, thank you very much for your support. I am very glad because you're watching my videos, and this is a boost for me in order to continue uploading these kind of educational information about these very passionating and a very beautiful market that is the Forex market. So today I'm going to start a series of videos in which we're going to talk about the bullish market patterns, right? So we're going to identify different patterns, and today's turn is for the morning star. So let's first identify the very pattern, right? How it is constructed, the very formation. This is a 3 candlestick reversal pattern that appears at the end of a downtrend. As you can see on the screen, the first candle is a long bearish one showing strong selling pressure. The second candle is a small botted candle. And here is the detail. This second candle can perfectly be a doji, a spinning top, or a hammer. When these ones appear there, signals that the market is in a process of indecision. The third candle is a strong bullish candle that closes above the midpoint of the first bearish candle, right? So as you can see here, this is the construction. So we have we are in a bullish trend, right? In a bullish trend. And this is the correction in here, right? In my bear correction. And suddenly appears below this one or right close, because sometimes it can be also being detected as a morning star if the close of the hammer or the doji is right aligned with the opening, with the close of the bear candle, right? So I have this one as a doji or as a hammer or a spinning top, and the next candle is a bull one and closes, right? It opens here and closes here above the 50%, right? Or the midpoint of the bear candle. So let's see this on our charts. On my MT5 platform, I previously searched for patterns in order to save time for the video. But this is always a very good exercise. Dedicate this as investing time in observation. Another thing here is that remember that trading is an art. And such an art, we will not always find the very candle formations as we see them in diagrams, in figures, in representations. No, the real candles need to be interpreted according to the market condition. For example, this one that you can observe on the screen is a nice morning star. So we have this thing. This is a bear trend, okay? Because I have my EMAs are aligned. Somehow I'm seeing these higher highs, right? Higher lows. Well, here's a little exception. So it's somehow a kind of a bull trend. And appeared this formation here. What is this? So I have my strong bear candle, and I have here this little hammer, right? And then I have my third candle that closes way beyond the 50% of the red candle. That is a nice indication, right? So somehow this is a valid morning star. Once again, remember, we cannot rely only on a single pattern. Not just because I identified a morning star in a not very clear bull trend as this one that I'm showing here, so I'm going to make the decision and pull the trigger. No, that is not responsible. You always need to fully rely on other indicators, on other signals. Remember, the purpose of these videos in this moment of the course is just to tell you how to spot the different patterns, not to trade them directly, because we need a trading plan, and that is the objective of this course, okay? everything goes little by little. First of all, we go identifying different patterns. This is not even a full technical analysis, what I'm doing here. I'm just showing you the very patterns, no more. However, I like to hypothesize eventually, if I have my trading plan, right, my sound trading plan, how I would trade this pattern, okay? And that's what I'm gonna do. For example, here, let's say that there are many valid things for this pattern. What is the proper way to trade it? Okay, my entry point. Remember, I need to be patient. The patience in here is to wait. I mean, I am in the 15-minute, look at this. I am in the 15-minute time frame. Okay? I'm here in this time frame, 15 minutes. This candle took 15 minutes. This one took 15 minutes. And the final one took 15 minutes. So I need basically to be patient for 45 minutes, right? When the final candle, okay, the third candle closes, when that candle closes and all the other indicators and everything in my trading plan are sound and in agreement with this pattern, so what I'm going to do is to entry my setup. So I enter right here, okay, above the third candle. Then I calculate. Remember that I will tell you about all these things in coming videos. But let's see that I have 11 pips in here for my stop loss. So I'm going to place my stop loss here. This is around 11 pips for my stop loss. So what I have to bear in mind? Okay, my ratios. So remember that always my ratio is 1 to 2 or 1 to 3. It means that if I am investing 11 pips in my stop loss, ideally, right, I need to collect 22 pips in my take profit, okay? And that's what I'm going to do. So I basically calculate from my entry point here my 22 pips. Let's hit it a little bit. Okay, I'm going to be a little bit aggressive here. I'm going to put it right below this pivot point. You see this red line in here is a resistance. It's a pivot point that showed resistance in here. So I'm going to place it a little bit below this one. So I'm going to collect 26 pips. So that is going to be my take profit, right? All right, I just set my trade, wait for the candle, the next candle triggers my entry, and that's it, okay? Let's see what eventually happened if I had, in fact, taken this trade. Look at this. Look at this. All right. So it basically, when I enter, it a little bit almost touching. This is very interesting. Look at this. Here, this was the moment in which when the trade was activated here, right? It came up very good, very nice, then retraced, almost touching the stop loss, right? And then went back again up, and touched my take profit, okay? So this is a very interesting way to start playing, right, your hypothetical trades. Let's analyze other aspects in here. What happens in the moment? What happens in the moment of the trade when it was triggered? If I rely, for example, on other indicators. For instance, it gives me confidence here to take this trade because there was this EMA here. This is an EMA 50. And here, there was support, right? There was support. So that is a more confident signal to take the trade, okay? That is one thing. That my EMA was exercising there as a support level, okay? Because this in my this little hammer here didn't cross it. right? So cross it, but pull it back, and then up, right? Retraced, okay? But again, in the same support in here, and went back up to the bullish moment, right? So this is a very interesting observation. And what we can say here is basically this: the psychology behind this pattern. As you can see, the first candle confirms a strong downtrend, okay, or a correction. The second candle represents a pause in selling, as neither buyers nor sellers dominate. That is the reason, because the week, right, is sometimes very long, because in a moment the market was very bear, but then retraced. That is indecision. Every time we see those long weeks, either way, up or low, is because the market is in indecision. And finally, we have the third candle that shows the buyers are taking control, suggesting a reversal, or that the correction has finished, and then the course of the trend continues in the bull, right? So that is basically how we can use it, and rely on other signals, as I showed in here, with the EMA 50 or EMA 18, or of course EMA or SMA 200. Okay, those are very reliable, in this case, support levels, right? So I hope you enjoyed this video. Thank you very much for your time, and see you in the next video with more patterns related to the bullish movement. So my dear people, thank you very much.